Alright, let's dive into something that's got the tech and finance worlds buzzing: SpaceX's first earnings report since going public. But here's the thing, this isn't just about numbers. It's about Elon Musk's vision, the future of space, and whether Wall Street is ready to bet on it. So, let's break it down. First off, the hook. SpaceX's stock has been on a wild ride since its IPO in June. Opening at $150, it's now down 24%, wiping out nearly $500 billion in market cap. That's a lot of zeros, and it's got investors jittery. But here's what's fascinating: this isn't just a story about a stock drop. It's a story about ambition, and the cost of that ambition. SpaceX lost $4.9 billion last year, largely because of its massive investments in AI infrastructure. Personally, I think this is where it gets interesting. Musk isn't just building rockets, he's trying to merge space exploration with AI, even talking about building data centers in space. It's bold, it's risky, and it's exactly the kind of moonshot thinking that makes SpaceX, well, SpaceX. But let's talk about the elephant in the room: Starlink. This is SpaceX's cash cow, generating $11.39 billion in revenue last year and accounting for 61% of total sales. It's also the only profitable part of the business. What many people don't realize is that Starlink isn't just about providing internet to remote areas, it's a strategic play. With over 12 million subscribers, it's a lifeline for governments, military agencies, and consumers alike. But here's the kicker: SpaceX recently raised prices and added a $10 monthly kit fee. In my opinion, this is a test of how much demand is really elastic. Can they keep growing subscribers while increasing costs? That's the million-dollar question. Now, let's talk about the analysts. Phillip Capital just gave SpaceX a rare sell rating, with a price target of $75. That's a 35% drop from Monday's closing price. Their reasoning? Big losses and negative cash flows expected until at least 2030. But here's where I think they might be missing the bigger picture. Yes, SpaceX is burning cash, but it's not just burning it, it's investing it. If you take a step back and think about it, SpaceX is playing a long game. They're not just a rocket company, they're a space infrastructure company. And infrastructure takes time, and money, to build. What this really suggests is that Wall Street might not be ready for SpaceX's kind of innovation. Investors want quick returns, but SpaceX is playing a different game. They're building a future where data centers orbit Earth and Starlink connects the globe. It's not just about quarterly earnings, it's about reshaping industries. One thing that immediately stands out is how Starlink's profitability is being scrutinized. Analysts are watching subscriber net adds and average revenue per user like hawks. But from my perspective, the real story isn't the numbers, it's the potential. Starlink could be the backbone of global connectivity, and that's worth more than any short-term loss. So, where does this leave us? Personally, I think SpaceX's earnings report is less about the numbers and more about the narrative. Are investors willing to bet on a company that's losing billions today for a vision of tomorrow? It's a question that goes beyond SpaceX. It's about how we value innovation in the first place. What makes this really interesting is that SpaceX isn't just a company, it's a movement. And movements don't always fit neatly into Wall Street's spreadsheets. As we wrap up, here's my closing thought: SpaceX's earnings report isn't just a financial update, it's a litmus test for our collective appetite for risk and innovation. Are we ready to back companies that think decades ahead, even if it means short-term pain? That's the deeper question here. And honestly, I can't wait to see how it all unfolds. What do you think? Let me know in the comments below.